We're back with some breaking economic data.
That's right. The February jobs report is out, and the U.S. economy added 151,000 new jobs over the course of last month. So that's less than economists expected. The unemployment rate, meanwhile, ticked up to 4.1%.
Let's break down these numbers with our economic dream team, NBC News business and data correspondent Brian Chung and Investopedia editor-in-chief Caleb Silver. Good to have both of you with us. Brian, let's start with you. Just walk us through the numbers and how they compare with previous months.
Yeah, well, let's start off with the unemployment rate, 4.1%. That's basically around in line with what we had seen, which is kind of, summarizing this jobs report as not substantially different from this January report that we had seen in the month prior. Again, 4% is kind of the drift up that we've seen since 2023. But again, substantially better than some of the post-pandemic higher unemployment rates that we had seen. But of course, that headline number getting a lot of attention, 151,000 jobs added in the month of February. That's around here. Wall Street economists were expecting something a little bit closer to 170,000. So this is a little bit of a disappointment. But when you consider that, yeah, compared to other previous months that we've seen, it's really basically about bang on line with the average over the last 12 months. It's not necessarily too much to be read into, but again, Wall Street economists did expect about 20,000 more jobs to have been added in this month, but I wouldn't characterize this necessarily as a very disappointing report, just merely a bit below what Wall Street economists were expecting.
Okay, important context there, Brian. Caleb, when we take indicators like this, obviously this is all at the backdrop of what's going on with tariffs, on again, off again, exemptions and uncertainty. What does this mean, do you think, about the health of the economy and the job market overall?
Yeah, the headline numbers in the economy are still okay, but looking forward, they start to get a little bit weaker. When we're looking at consumer confidence and consumer sentiment, those are at multi-year lows. And right now, forecasts for GDP, for gross domestic product growth in the first quarter, have fallen to a negative 2.8%. So the headline numbers are starting to turn that way, even though the Treasury Secretary says the U.S. economy looks like it's about to go on a roll. I don't think that that's what this jobs report is telling us, and I don't think that's what a lot of the headline numbers are telling us.
So, Brian, let's dig a little deeper into the numbers. What are we seeing across different industries, different categories when it comes to wage growth as well?
Yeah, some interesting threads that we've been seeing here when it comes to the categories of the job market. Healthcare was the biggest sector in terms of added jobs this month. It added 52,000 jobs in the month. But interestingly, retail jobs at the mall, as well as leisure and hospitality, these are jobs at bars and restaurants, did see contractions by over 6,000 jobs in retail and leisure and hospitality, which, by the way, have been driving so much of the post-pandemic recovery. We actually saw a contraction of 16,000 jobs in that sector. Professional and business services, these are kind of like white-collar jobs in offices, contracting a little bit as well, 2,000 jobs as well. So there's kind of this bifurcation that we've seen where healthcare, and this is in line with the recent months that we've seen, have been driving a lot of job gains. But some of these sectors that were doing so well in the years after the pandemic are now kind of flatlining / maybe even contracting a little bit, like retail and leisure and hospitality. Interesting threads to watch. You also mentioned wage growth. Wage growth is continuing to outpace inflation, at least for right now. We've been averaging about 4% in terms of wage growth over the past few months as measured in a yearly rate, but that's been pretty solid when you consider that the inflation rates that we've been measuring have been somewhere around 2 to 3%.
Caleb, countdown. It's a quick one today. Are you excited?
Yeah, 12 hours, 12 days, 5 hours and 20 minutes, although Fed Chair Powell is speaking today later on, just down the street here in Manhattan at a monetary policy forum before the Fed goes into that quiet period ahead of the meeting. He'll say nothing about what the Fed intends to do. He will say the Fed's data dependent. This data tells him and the Fed and everybody else no reason to cut rates right now. 90% chance the Fed holds rates right where they are. One thing on that, though. If the economy continues to slow, if tariffs really start to manifest and slow the economy, that might force the Fed's hand to cut rates. We know the president would like lower rates. He might be forced into it if this economy slows down, as forecasts tell us it might.
So, Brian, the last thing I want to sort of touch on here is a lot of people are thinking about these mass layoffs that are happening right now. I know this survey usually happens the second week of February, so do we even see that reflected in these numbers, or when might we see that reflected?
Yeah, as you mentioned, I mean, the timing of this is kind of pretty close to around when DOGE was sending out those buyout offers. But what we did see in terms of the federal contraction, we saw a contraction in the federal workforce of 10,000 jobs. But the reporting out there is that DOGE, and again, this is according to the White House, had about 75,000 buyout offers. I think the question here is, if you took the buyout, do you then respond to a survey if the government calls you and asks you about these numbers and tell them that you're unemployed or employed? Because technically, I guess you're still getting paid out for a few months until perhaps the end of the year. So that's a big question. We'll have to see how the future jobs reports shake out. But I want to point out that 10K as a fraction of the overall federal workforce, the federal workforce is something like 2.6 million if you exclude a postal workforce. workers. So 10K as a fraction of 2.6 million, that's less than 1%. So that wouldn't be too substantial. And even if it were 75,000, that wouldn't be too much to make a dent in the overall federal workforce.
All right. Brian and Caleb, thank you both. Appreciate it.
Sure.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.